Hello traders, in today's video we'll be looking at trend continuation strategy. Okay, a lot of traders fail in this business because they try to catch the tops and the bottoms. They always look for reversal in the market, and that is a wrong approach. I used to be this trader. Whenever I see a chart, I always look for reversal back then, and I noticed that my stop get hit and I was not profitable. Okay, so how do you make money from the forex market? The logic is simply follow the trend. Keep following the trend until the trends no more. Okay, even if you think you are late to the party, still go for that trend continuation until the trends no more. Okay, so I'm going to show you the anatomy of a trend continuation pattern, okay, strategy, and the trade I took last week on pounds USD. Okay, so first of all, you have to determine the trend. Okay, we have different steps that you need to know. Okay, first of all, just two simple steps. The first one is to determine what the trend. Okay, this is your first assignment you need to be doing as a trader, either weekly, daily, 4 hours, 1 hour, depending on your time frame. You must determine the trend, but I will always advise beginners to always look for a higher time frame trend. Okay, but you notice the higher time frame trend, then you know that okay, this is what your directional bias will be. Why do you need to follow your trend, okay, or follow the trend? Is because of what is called institutional order flow. Okay, it doesn't make sense for you to be trading against the institution. You must be following the institution. Okay, and that's why we brand ourselves as what smart money trader, not because we have the big money that these big companies have. It's just that the ideology is simple, is to follow the big banks because they leave footprints, okay, on the chart. For example, this move here, down here, this is a big market move, okay, and you have to follow this trend. Anyone that tries to trade against this will be what? Taken out of the market. Okay, so your first thing is to determine the trend, and then the second is for you to identify the areas where you are to buy or sell, which I call, or what is called, point of interest. Okay, so first of all, now the second one is what? Point of interest. Okay, this is very important. So these are the two things you'll be doing: identify the trend. And how do you identify the trend? You use market structure. If you don't understand market structure, I did a video, I'll put it in the description. You go watch that video. You understand market structure. Then from the market structure, you identify the trend. You know that okay, the market is bullish today, I'll be looking for bullish setup. The market is bearish. The market is bearish today, I'll be looking for bearish setup. Simple. So, for example, if we have a bullish market, we are having market going up, no, bullish, and you find the market at this point here. No, a lot of people, because they've seen that this market has gone too high, they will start looking for what? Reversal. That is you committing suicide. Okay, that is you shooting yourself in the leg. Okay, you start to look for reversal, start looking for chalk. This is what most people do. You look for chalk, and then you try to take this trade, and before you know, price move up and knock you out. Okay, this is what most beginner traders, let me say that way, or traders who are losing in forex, this is what they do. They always they want to get the top and the bottom. Okay, they want to be the first to sell from here. No, you should not. Instead, what you need to be doing is identify some areas where when price get there, you can initiate to buy and continue this trend. Okay, continue this trend until you have a full confirmation that this market is willing to reverse. Okay, let me give you a very simple illustration. Okay, we have this is a bullish market. Why is this a bullish market? Because we have series of higher highs and higher lows. Okay, now this is a bullish market. When you come to this market, any currency pair or financial asset, and you see this setup, what should you be doing? You should continue looking for what? Bullish setup. Continue looking for bullish setup. Don't anticipate reversal. Okay, now how will you know that this market is no longer bullish? When the major leg, okay, we have major leg and we have minor legs. Okay, minor legs are those internal structure. Now when you have a break in the internal structure, that doesn't mean a break in trend. Stay with me. It simply means an avenue for the market to pull back before moving, because all this pullback now, you see, all this pullback are simply a change or a break in market structure of the internal structure. Okay, a break in the internal market structure. Now a lot of people, when they see that break, they quickly jump to the fact that we have seen a reversal. No, that is not reversal. It's simply an avenue for you to try to trade the pullback. Okay, and it takes a sophisticated trader to trade the pullback. Okay, if you're a beginner, you wait for this pullback to be completed. When this pullback is completed, from there you start loading up to continue the trend. Now, how do you know that the trend will be over? Is when the major leg, okay, the external market structure is broken. In this case, if this leg gets broken, that is where you know that your bias will change or shift to what? Bearish. Meaning we are at a risk of what? Reversing. Okay, and then you see something like this. Before that occurs, we will see something like this here, maybe a chalk, and then you see market going this way. Now the moment market breaks this main low, you shift your ideology here to what? To bearish. Why? Because there's something in here that made this low to go. That means the institution came in here to drive price lower, and in that case you then shift to what? Being a seller. Same thing applies to your bearish market. When you have a bearish market, do not pick the tops. Okay, do not be the first person to sell, to buy from here, because when you do that, I can guarantee you 80% of the time you'll be losing money, or even 90% you'll be losing money, because you are trying to trade against the trend, especially when these trends are in the higher time frame. When I say higher time frame, I mean daily, weekly, 4 hours. Okay, so now what you need to do here is simply identify your point of interest. Identify your point of interest. You might have different point of interest here. Okay, and it's not a guarantee that price will get to all of this. Okay, very soon I will launch my membership site, so that instead of doing a course, a kind of one-on-one, I prefer the membership, so that every month you be with me. I'll be having some times where I'll be going live on the market, so that you can see the way it's being done, not courses. Okay, though I will try to do some few courses here and there to put on the site, so that you can quickly go through and brush your skills, because you need to understand the terminologies that I use. But until then, I will make the announcement very soon. So if you're interested, just stay put. The announcement will be out. Now all you need to do is simply identify your trading range first. Know your trading range. Now, okay, you are trading on this leg. The recent leg that broke structure is what you'll be looking at. look at the recent leg that broke structure, because you want to be going continuation. Do not look for reversal, especially if you are new in this business. And if you are new to this channel, please subscribe, click the like button, and share this video to your colleagues or anyone you feel might need it. So now you identify your point of interest. Okay, there are a lot of concepts that you need to understand before you execute this. Okay, one of the concepts is the premium and discount. Okay, now because you want to sell doesn't mean you start selling here, especially when you have an external point of interest, for example, that the price has gotten to. It doesn't make sense to start selling at this demand zone here. Okay, give a benefit of doubt for this zone to at least give you that reaction to the upside before you continue to break it, because eventually this demand will give room for the supply. Okay, so all you need to do, your area of premium and discount, wait for price to get to the area of what? Discount, area of premium in this case. Wait for price to get to the area of premium. Okay, from there you engage to continue going lower. Now always have your target in hand. Okay, at hand. When you are buying, when you are selling here, your target will be the end of this leg first, this first trading range. This will be your first target. Okay, this should be your first target. When you hit that target, you can take partials and allow the rest to run. Now for a bullish move, what you need to do is identify your point of interest, okay, that are in discount zones. These are simple basic trading skill, but all you need to do is to understand proper risk management. Okay, you can decide to buy yet. Okay, to continue, this will be your target, because all of these are open space. Okay, and again there might be some form of supply zones. You don't want to be in profit and then see your profit being wiped out, especially when we have extended trend like this. At any point soon you can get reversal. Okay, but if you understand the higher time frame narrative, you will not be scared that price will reverse from here. Okay, you might have a higher time frame target. However, if you are entering in this particular time frame, now do not always go to the 1 minute, 5 minutes, want to get that sniper entry, 2 pips, 5 pips. No, you don't need it. Okay, all you need is to be profitable so that you have confidence. You need confidence in this game, and that confidence will not be gotten at the 1 minute, 2 minute time frame. You'll get burned so many times unless you are very experienced in trading. If not, if you are new, which I believe most people on this channel have, start from the 1 hour. Let the 1 hour be your entry time frame. If you want to go down than that, go to 15 minutes. Then look for something like this. The stop loss could be 20 pips. It's still good. The main aim is for you to come out profitable. Okay, that means you can read the market very well and you can execute. So now I'm going to share with you a trade that I took last week on pounds USD. Now, those that did the free live workshop with me, I told you the market is bearish. Okay, if you are part of it, put in the comments so that people know that I'm not saying something, I'm not making things up. Okay, now, but what I didn't do is I didn't give out all the details, because I only opened it for free for people to join, and they actually got value, but I just hold behind some information. Now, this market, as you can see, is very obvious. Is what? Is bearish. Is bearish. Now, at this point, the market was here. All of this hasn't happened. Okay, let me circle that. All of this hasn't happened yet. Okay, we were just here. Okay, so now for me to continue this trend, I have to wait for price to come up to area of discount. I had 2 points of interest here. The first one was this. Okay, the first one was this, and the second one was this. And I took the trade in between here. Okay, I was scalping because I didn't see enough momentum, and I knew that I think there was some form of news release, but I won't go into that. So my best position, my best probability is for price to come in here with a limit order, stop loss above. Now in this case, you can see that the stop loss is about 30 pips. There's nothing wrong with it. Do not allow people deceive you with 5 pip, 1 pip stop loss. No. The main thing is to understand, have a trade idea. Have what is called a trade idea. Now, with your trade idea, you should know where the trade idea will be invalidated. Very important. And in this case, if my trade idea was to be invalidated, it means price should trade above this high, and this is where my stop loss is. Okay, now some people say, oh, I want to sell from the 50% level. Now if you do that, you can say price didn't get there. Price didn't get there. Do not be moved with precise entry, though this is a sniper entry anyway. Okay, this is a sniper entry, but the idea is not to be having sniper entry. The idea is to have a trade idea, a logical trade idea, and know how to execute the trade. Okay, this was the take profit. Know how to execute trade execution. Okay, have a trade idea and also know how to execute that trade. That's the most important thing. Now, when I was entering here, this was my target, and when the price got there, I put a limit on that because I have been busy these few days. You will notice I've not been releasing content. I've been busy, off chat most times. So this trade I took on my phone, most of the trade, I'll put a screenshot here for you to see that I'm not, kidding with information. I took this trade. Okay. Now when price entered there and about leaving, I got my confirmation anyway, and I entered. It wasn't at this point precisely. From the screenshot you're going to see. So from there, I have a simple word 1 to over 3 point something risk to reward, and it's okay with that. I'm okay with that. Okay, I took partials and allowed some to run. By the close of the day, I tried closing all my trades. Okay, now you can see market pullback here. This was another trade. I will make a video on this for a short, because the market is still what very bearish. Now, however, this is the recent leg. Maybe this will be another video, and we have some close above, so we might consider a further push up, but I still favor a bearish move. That will be another video for another day. So when you are trading, always go for, when you are trading, always go for the trend. These are institutional order flow. In this case, the institutional order flow is bearish, and there's no point you trading against picking the bottom. You want to be the one to sell from here. All those people buying from the bottom are being wrecked. You can see they are being wrecked because many of them will want to hold on to this trade probably till it gets to this point, and they will be hot. Okay, try to predict the bottom. You're down, predict down, try to pick the bottom. They have been taken out. Okay, so try this method, back test it, and this is simple demand and supply. Okay, there's no rocket science to the point of interest here. They are simply area of what supply and demand. In this case, this area of what supply. You can call this an order block, but they are all supply and demand zones. Nothing new. Remember, nothing new. I will link a video to the truth about smart money concept. Try to watch that video, and you know that there's nothing new in trading. All you need to do, you are going to discover this thing on your own with time. By the time you have a mentor that shows you, then on your own you're going to develop something. That I can promise you. You'll develop something and be able to pick the signs whenever it comes. Okay, on that note, I will see you in this video.